Steve Tusa from JP Morgan, who some consider one of the more prescient analysts on General Electric stock, is just out with a research note saying that they feel as though the risk reward of GE shares heading into its Thursday earnings report is unfavorable. And that has now sent shares down towards their session lows. As you can see, they're now down by about 1/3 of 1%. Just a couple of points here. They talked about, Scott, the outperformance of GE shares ever since those lows that we saw back in late December. Also, the idea that there may not be any quote-unquote silver bullet-like plan and that much remains negative still. So that's just a kind of synopsis really quick of the note, but that's the reason why GE shares, Scott, are moving to the downside. We're going to sift through this a little bit more for details, but again, that's the reason why shares are moving down, Scott.
Thank you, Dom.
Sure.
Steph, Tusa, this guy's been the GE whisperer, right? He's gotten it right all the way down. You were buying the stock. I don't know what your position looks like now, but he had a note the other day that said the move higher was basically much ado about nothing. It was just like a Seinfeld play. The whole thing was about nothing.
And December was a raid. It went from 11 to 7 on no real new news, and I think people just pressed their shorts. It was easy to do. There's no new news out there.
666, the low.
Right. So, and so to my point, I mean, it just got absolutely demolished. The stock's up 17% year to date. I have said it for a long time, very consistently. You do not buy this for the next quarter. You buy it for the CEO, the lead director. You buy it for the optionality and what they can do to this company to change it and make it better. Could not be any worse at this point, right? But this CEO has a wonderful track record in terms of fixing companies. And now I don't think it's going back to its old high of 30 or so. I do think it goes higher here over the longer term. You're going to have to be patient, though. You're going to have good days and bad days. But I like the action so far this year. And again, I'm not playing it for the short term. I'm playing it for the longer term.
Maybe, I don't know what you guys do with this. Maybe you
GE
don't buy it.
is a crime scene. It's a crime scene.
Buy it.
Crime scene. Why there's no class action suit on this, I don't know. 30 months ago, it's $2.06 worth of cash flow. Now, nobody knows.
There are several.
The old high was $60 on this when it had a black box in finance. This is a crime scene. The equity, in my view, is worthless. If you own the debt, one day maybe you get something for it. It's every CEO de jour. Every 30 months you get a new CEO, and they lose 30%.
Culp is so much different. Culp is so much different than ML. No,
Which one? I can't remember which one we got.
Culp was from Danaher. Go check out the track record of Danaher when Culp was there.
This stock's a zero.
That stock did.
It's a zero.
Okay, I'll take the other side of that. That's fabulous.
You think the equity is going? So you short the stock?
No.
You seem pretty convinced.
Because, I tried to go and short this thing. It's impossible to read the balance sheet. I'm a balance sheet guy. You find me one analyst that can read the balance sheet.
I agree with that.
I can't short it because I don't know what's in there.
But you think the equity is a donut?
Easy. This is a company attached to a liability. And every CEO that comes in here and says they can run it loses 30%. And this is the third team. Look, I'm calling it what it is, all right? It's a crime scene.